Hello traders and welcome to another video review. Today is Friday, January 19th, 2024. Let's find out what's going on the economic calendar for today. I got only medium and most important data releases on my schedule, and as you can see, we got first important data. Those data are from the UK in form of the core retail sales and retail sales. As you can see, most of them completely disappoints the market expectations, so we will definitely take a look at the British pound for today. German PPI data, producer price index, way below the forecast of minus 0.5. The producer price index deteriorates even lower to minus 1.2%. Producer price index from the Switzerland is in line with the expectations, minus 0.6%. Remember, we are still continuing the World Economic Forum annual meeting in Davos, Switzerland, so please be prepared for any remarks and any comments from the officials today as well. Then, one of the most important events of today, European zone CPI data and core CPI data are scheduled for release at 11 o'clock, which is why we will take a look at the euro dollar today just ahead of the data release. Then we have the core retail sales and retail sales data from the Canada. Those data are scheduled for release at 2:30. And at the end of the day, we got all of this bunch of the data from the USA. Existing home sales is the one of the most important ones. Then you got the Michigan inflation expectations, 1 year, 5 year, then consumer expectations and the consumer sentiment. All of this data are scheduled for release at 4 o'clock. And then you got the Atlanta Fed GDP now, and at the end of the day, 7 o'clock, US Barker Hughes oil rig count and total rig count. So as you can see, plenty of the data are scheduled for release during the New York session as well. But first, let's just jump to the British pound and then to euro dollar to see how this data affected the market behavior. The 4-hour chart of the British pound, the most famous cable, is looking, as you can see, quite bearish. So we just recently got this bullish engulfing pattern on the 4-hour chart. We broke above the technical resistance located at 1.2675. Then we made a local high just ahead of the data release. The local high was made at 1.2713, and this is where we are going to move our technical resistance, because the other one was tested and it was violated, so it won't be necessary to have it right now. So 1.2713 is a last local swing high. We got some kind of a pattern here, engulfing pattern here, and now the market is going down. The market is actually just below the old trend line support and now resistance. So what we should expect is the market to test the level of 1.2647. All right, this is the local technical support. Let me just mark it for you guys. So this is the local technical support, and when this level is not enough for the bears, of course, the lows from the bullish engulfing pattern located around 1.2596. Let me just place a additional line here. Those levels might be tested soon as well. So as you can see, this is the key technical support before the swing low is hit. So the zone between, let me just take a look, 1.2596, 1.2611 or 13 even, is the zone that should be really in the back of your head, because any violation of the zone would open another let's say almost 100 pips territory. Big candle was made here. Look at this nice big candle. 100 pips was made, and this is why the next target is located at 1.2503 if this zone is violated. So stay focused, stay vigilant. Momentum is reversing already right now, 46 points on the RSI only. So British pound looking bearish for me. Now let's take a look at the euro dollar. The euro dollar, as you can see, doesn't do much because it's still trading in that nice correction. It tried to move higher above the 50 periods moving average, but it didn't work that well, and the market returned to the consolidation. We tested this level here, 1.0844, twice already. Okay, so last time we've done the hammer, now we've done a test and a bounce towards the 50 periods moving average and the intraday technical resistance located at 1.0891, but there is still no breakout to the upside, and that's maybe because the momentum is still negative, the momentum is still weak, and the bears are in charge of this market. So we should see another movement to the downside soon. If the market will eventually break below the zone 1.0845, 1.0829, then there is a gap towards 1.0743, 1.0724, and this is the next target for bears. So it looks really bearish here on the euro dollar. We should see lower levels soon because we got some data from Canada. Let me just take a look at the Canadian dollar. Why? Because it's approaching very nice level. So this level is of course the technical resistance made by the trend line. So as you can see, we got this nice trend line here, and the first pin bar was made roughly around the 100 periods moving average. This is a daily time frame chart, so it's quite important. Local high was made at 1.3540. Next day we got the confirmation and red candle moving lower, and the lower low was made, and today it looks like we cannot even break above the moving average 1.3502, and this level here might be the next technical support, 1.3442. So let me just switch it. Let me just okay, this one is not important. This one is this one, it needs to go here. So that's a daily intraday technical resistance, and this one is now support, 1.3442. And of course these two levels are the key levels for the bulls, the level of 1.3416 and the level of 1.3381. Any violation of these levels will not look good for the bulls. How much did we retrace? That's the other question we want to ask ourselves. How much this movement to the upside retraced actually, so we can see what was the situation here. So let me just drag my Fibonacci tool, and you can see clearly that we retraced almost 50%. Let me just mark it for you guys. There you go. This is the 50%, and that's spot on 1.3540. The 50% level was hit. So 50% retracement done. Now the market is ready to continue the down move because this is the major move. This is the major move, and this is the correction, and that might be another continuation of the major move. So this is wave A, this is wave B, that might be the wave C to the downside. However, momentum is still positive, momentum is still strong, 58 points. So maybe, just maybe, we will test 61% of the Fibonacci retracement, 1.3623, but to do this, the bulls needs to break above the technical line, trend line, which is descending trend line, so it might be a little bit harder than usual. And last but not least, let's take a look at the Bitcoin, because the Bitcoin is apparently doing his own things. After the pin bar reversal candle was made, the market bounced a couple of times from this local trendline support, finally broke below it, and now we have a new local low made at 40,598. So we are just testing this spike to the downside low. This is the technical support. The other one is that one, 40,158, and the last one is 39,822. Now, any violation of the zone, let me just maybe zoom out. Let me just zoom out, because you can see that any violation of this zone would extend the drop towards the next zone, which is located between roughly around $38,000, $38,530 and $38,080. So there is a nice gap to the downside if bulls will not hold this this bearish pressure. Nevertheless, look at the momentum. Momentum is testing the extremely oversold market conditions on a 4-hour chart, so maybe, just maybe, that might be enough for the momentum to bounce and maybe do some sort of the pullback. But the outlook for more bullish would change only if this level here, local technical resistance at 43,576, is violated, right? Otherwise, the outlook remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.